Well, howdy. Thanks for stopping by. My name's Dave Freitag. I am the Wall Street Cowboy. We're here today to talk about week 33 Bulls and Bears. So sit back, enjoy the ride, and let's get started. Alrighty then, let's go ahead and get started on week 33 and how we did this week relative to last week. What you're looking at here is the performance of all sectors. I don't think this is drilled down to any specific family of ETFs, but looking at all the stocks in the universe of, say, the industrials and the consumer cyclicals and energy and so on. So for the last week, industrials led all other sectors, and that was followed by consumer cyclicals and energy. Energy taking an opportunity to surge a little bit this week. Basic materials is starting to lose a little bit of its momentum, and technology had a pretty pedestrian week, down just slightly. Over the last month, we have the same industrials and consumer cyclicals. We also have technology over the last month showing some strength. This last week, technology had a fairly pedestrian week, as we mentioned, and I think that over the next week or two, I think that we're going to see a little bit of a rebound in technology as we head towards the end of the month. So let's go ahead and take a look at the ETFs that I follow and see how they stack up compared to the overall sectors as measured by FinViz. Okay, now looking at the ETFs that I follow, which are the Spiders ETF, and I follow here the XLI is the Spiders ETF for the industrials, and the XTL is for telecom. And this is last week, so the number 1, 2, 3, and 4 last week was industrials, telecom, finance, and utilities. So for this past week, over the last 7 days, the top performing were telecom, industrials, tech, and consumer discretionary. So we're seeing some of the same sectors over the last 2 weeks in the top 3 spots. This week, the number 1 performing sector was industrials, up about 3.19%. The number 2 performing was energy, but that wasn't enough to bring it up in the monthly rating. So here's our monthly rank, and this is our weekly rank. So the ones that we're seeing, if you're bullish, that you might want to be in, continue to be telecom, industrials, technology, and consumer discretionary. If you are bearish this week, you might want to look at basic materials, energy, and utilities, followed by health. Health come in at number 8. That's pretty pedestrian. It underperformed the S&P 500, which came in 7th, and it'll always be the S&P 500. That is, always be in the middle of the list somewhere. So health continues to struggle, but should be one of those sectors that should pick up shortly. Alright, now let's take a look at our individual bulls and bears from last week. Alrighty, so these are our bulls from last week. We started off last week with AMD in the top spot, and Hospital Corporations of America was number 2, followed by UPS. And these red shading areas means that they had a down week this week, and I shade those red. So we had a number of them that ended up having a down week by Friday. But over here, we have our expected move and therefore our target. And our expected move is derived by taking the price that the stock closed at on Friday a week ago and multiplying the monthly volatility, which in this case was 5.15%, by that price, and we come up with an expected move of 4.37. Pretty simple, easy peasy to do. Now we add that 437 to the 85, and we come up with a target price of 89.22. So AMD did not hit our target price. The high of the week was 85.16. So it wasn't necessarily a bad week for AMD, but it didn't hit our target. In other words, it didn't necessarily go down on the high of the week, but it certainly did not hit our target. Now, on Health or Hospital Corporations of America, we did. That's why it's shaded green. It did hit our target and exceeded our target. Our target price was $134.73, and it got to $134.97, so by 20 cents. UPS also hit our target and exceeded it, as it did with PHM. There were only a handful of stocks that didn't perform as we might have wanted them to do in a week. But keep in mind, that's a month-long of volatility we're calculating in. So we don't expect everything to hit our target price in 1 week when we're using a 1-month volatility. So overall, this was pretty good. We had about 13 of these. Let's see, 1, 2, 3... 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. 13 out of 20 hit our target in a week. And again, we're looking at 30 days of volatility. So that's not too bad right there. We can see how they performed over here. AMD was up 1.27% for the week. Pardon me, Arthur Daniel Midland was up 1.27%, and AMD was down 4%, and Best Buy was up 6%. So what we had is a mixed bag here, but overall we had some really good opportunities. If you were looking for them, they probably played out if you had 1 or 2 of these. Alright, then let's go ahead and drill down on our bears from last week. Right over here is a list of all the stocks that were on our list from last week. This was based on their performance over the previous 30 days. This was the worst performing Intel, and Las Vegas Sands was also a poor performing stock, but not terribly bad, being down only 1% over the last 30 days. But these were the worst of the worst over the list, the universe that we use, which has got some filters that filters out a lot of stocks. We don't have every stock out there. There's probably a lot of stocks that did a lot worse than Las Vegas Sands. This is how they did for the week. And now we have this done in an alphabetical listing, and we're going to do that going forward. So over here's the low of the week. Intel hit a low of 48.06, and it missed our target by 73 cents. That's a stock that you probably, if you took a position, and you probably could have closed it on at some point during the week for a pretty good profit. This one's in yellow, meaning it was a near miss at only 18 pennies away from what our target was for the week. We had a target of 148.97, and it got to 149.15, 18 pennies above that. So out of that, I think we had, 7 stocks? 1, 2, 3, 4, 5, 6. Yep, 7 stocks that hit or exceeded our target. So on our bears during a very strong bullish week, that's not really a bad number. During a bullish week, all stocks are going to have some momentum to the upside unless they're really, really a bad, poor stock. So you're going to have some surprises during a bullish week, especially a very bullish week, when you're trying to be bearish on the market. For the week, I think it was about a 50-50. These were our 20 stocks that we were following, And of those, yeah, this is their performance for the week. I think there were about 10 that went up and about 10 that went down. So that's to be expected. You're not going to get all 20 stocks or even a majority of the 20 stocks to go down during a bullish week. So overall, this is how we did. We had some pretty good opportunities out there. This number over here just gives you how much that it missed by on our projections on our target. So a couple of pretty good whiffs. We had this one here, microchip, missed by $2. It had a pretty strong week. This week it was up 1.24%, and Las Vegas Sands, all the gambling stocks, did very, very well, especially towards the end of the week. Las Vegas Sands was up 9%. MGM was up real strong. It's on our list of bulls this week. You'll see in just a moment. So some of the gambling stocks here in Las Vegas. Some of you know I live in the beautiful city of Las Vegas, and I do have a regular job. I work on the Strip at Las Vegas, so I get a chance to see the change in the business cycle. This is a typical, very busy week in Las Vegas. We're coming to the end of summer. The kiddos are going to be going back to school here in some form or another, whether it's a hybrid of being in class and being at home and being homeschooled. But at some form or another, they are going to have to return to school. So the business climate here starts to decline a little bit, and the closer we get to November and December, the less and less business we have here in town. We have had approximately about 50% of what our normal volume is here in Las Vegas since this pandemic started to close out. Now, I'm not suggesting that we're over the pandemic. I'm just suggesting that we have started a march back to being normal. We here in Las Vegas don't expect this to change much for the better for at least a year. Probably 2 years before we get back to where we were last year, which was one of our very best years that we've ever had here in Las Vegas as far as the business cycle. So we have a couple of hotels here that are struggling or perhaps taking advantage of an opportunity. The MGM resorts are making some changes, and they're continuing to keep some of their hotels closed or abbreviated hours. The Wynn is laying off a number of employees, and the McCarran Airport is laying off a fairly large number of employees too. This is all systematic of the slowdown here. Now, we do expect it to be temporary, expect it to pick back up here at some point in the future. When that will be, nobody knows, but I think most of us are expecting that to take a minimum of a year, probably two, before we get back to normal. But that being said, there's some opportunities in the gambling stocks and the resort and casino stocks. So take a look at those. There may be some movement that you can take advantage of in Wynn, MGM, and in Las Vegas Sands. We also had Caesars, which was purchased by El Dorado Hotels and Casinos out of Reno. I don't know the details on that. I don't know if that's been finalized yet. I just do know that there is some arrangement where El Dorado is either taking over the Caesars resorts, or they have bought them entirely. We also have the Rio Hotel here in town that there is speculation that there's going to be some changes there because it's out by our brand new stadium put up by Allegiant Airlines that is going to be the home of the Raiders national football team. The stadium is looking great. It's almost done, but there is very limited parking. So we need to come up with a solution to the parking issue that we have for Allegiant Stadium. There is speculation that Rio is, the Rio property is part of that solution. We'll just have to see how the whiz kids figure that out. But in that volatility, if you will, there is opportunity. Whatever happens, you can take advantage of that if you pay close attention to what's going on, because these stocks can move pretty big, as you saw here with Las Vegas Sands moving 9% in a week. That's a pretty good move. And then when we look over at the bulls for this week, you're going to see that MGM had a pretty good week and a pretty good month. So take a look at these and make some choices, but I would do so with only highly speculative dollars, because again, nobody knows what's going to happen here in Las Vegas. I just know that things are not as busy as they were. There are layoffs coming, and that presents opportunities for new money to come in, new management to come in, and redirect operations in a way that may be more profitable in the future. And existing management may have to make some changes based on the new business climate that we have here. We have a very different clientele here in town. It's a very big difference from last year, and so they spend differently. Well, there are going to be some businesses that last year had great years that may not have great years, and vice versa. There might be some that in the past haven't done all that great that may be really big opportunities, as we have a new clientele here in town that has different spending habits. So that'll just give you a little insight on what I see as a resident here in Las Vegas. Now, I don't mean to suggest I know what's going on behind the curtains. I don't. I know what I hear, and I know a lot of people here in town, but nobody knows what's going to come up over the next 2 or 3 months to 2 or 3 years. I do know there's going to be some changes, though, because you can already see them happening. All right, so let's go on to our bulls for the week and our bears for the week coming up. Now, taking a look over at week 33, our bulls for the week. Here we go. We've got AMD topping the list. Their monthly performance has been about 48%. That's very, very good, but you can see last week was not their best week ever. So again, there may be an opportunity to gather up a little bit before end of month. Down here at number 8 is MGM. They had a fantastic week, as did Las Vegas Sands. So there are some opportunities there. This gives you their sector they're in. So there's a pretty good cross pollination between many different sectors, but consumer discretionary seems to hold a lot of these spots, as does industrial and tech. So those are the 3 that led going into this last week. So those are the ones that I would be looking at most closely. Some of these have been on this list for a few weeks. We got FedEx and UPS taking the number 3 and number 4 spot, over the last month. There's some opportunities there. You may see that eBay may end up being on our bearish list. So some changes there I was surprised about. Apple's doing very, very well, up 19% over the last month. That's pretty new. I haven't seen Apple on our list. And Monster, the very famous and popular drinking beverage, is also doing quite well. Nvidia is one of those high-flying stocks that sometimes can show up on this list. It is having a tremendous month. And again, we're getting into the Christmas holidays are coming up on us in less than 6 months. And Nvidia is also a leader in the virtual reality space as far as some of the technology that's going to be coming from that. So there's an opportunity there. So these are our bulls for the week. And I would look at those and make your analysis based on how they're doing. And keep in mind, we do have earnings either just come out on some of these, or it's going to be coming out. We're in the middle of earnings season, maybe getting towards the 2/3 of the way through. We have quite a few that are still outstanding that need to report, but there's a lot that have already reported. So keep in mind, you want to look at the next earnings announcement to make sure that you're not being whipsawed by an event that you don't have any control over. And momentum plays less of a role than opportunity. All right, so let's take a look at our bears for the week. We have a number of these that are new to our list. All right, Western Digital is on the list now, as in Intel, which has been one of the very worst performing stocks, actually had an up week. So they may be setting in a bottom. Gilead, they were working pretty good before when we were looking for a vaccine for the COVID virus. They have since started to really drop off. They do a lot of research on infectious diseases, and they are a pioneer in the HIV solution to a virus, to a vaccine for the virus. So they have been dropping off also, as has Lilly. So those are healthcare space stocks that you might want to look for an opportunity. Again, we talked about eBay, number 20 of the 20 worst performing stocks over the last 30 days. It's down 4%. It had a good week, up 2% in a week. It's a pretty good week. You can make some good money on that. So what's our targets on these? Well, we have a target of $27 for FE. FE has an expected move of $1.75. That's taking its price, which is right around $30, and we're multiplying that by the monthly volatility of about 6%. A 6% move in a month is a pretty good move, although $1.75 may not sound all that exciting. It is an opportunity to take a bearish position in the stock, and it's not expected to take you out at the knees here. So that's an opportunity. Looking down here at Netflix, we're expecting that to drop by about $14. Now, Netflix can have some pretty spectacular moves. Be very, very careful. That's an expensive stock. It's up near the higher end of the range of stocks that we look at the universe. I really kept that off at about $500, but that one over the month has been down almost 10% at 8.5%, and it was down another 2.5% over the last week. So Netflix continues to be an opportunity that you can take advantage of. And here's Amgen, another healthcare stock. So you begin to see how the sectors are now playing a pretty significant role in how we should be taking our positions. And microchip is down here. I think it was on the list last week also in the tech industry. So these are the stocks I'll be looking at. And next I'll show you how I look at them and how I make a decision on whether I want to go with them or not. Okay, what you're looking at here is a 4-grid chart on the daily time frame for the SPY, the ETF for the S&P 500. What you're seeing is different clouds in the background. Green means that it's bullish. Red means that it's bearish, and if it doesn't have a cloud, it means it's probably in some kind of transition or compression period. We have the first thing I look at is this DMI oscillator. If it's green, then I am bullish. If it is red, I am bearish. I do not take a bullish position if the DMI oscillator is got a red histogram. That's just one of the rules I have. And it changes the color of the candles based on the condition of this histogram. So in other words, just because that candle's red does not mean it was a down day. It means that that particular candle, the DMI, was below a zero line. So it changed the color of the candle to red, even though it was only for one candle. So looking at this SPY, I've got a green background on the whole moving average on the daily time frame, green on RSI Liguer, green on the DMI oscillator. I am seeing a red or a bearish background on the market forecast. You can see the names are right up here for you. And I've got a sell on the ready, aim, fire. That's our last signal, and that continues to be an active, and a current signal is bearish. And then I've got a bullish signal on the high-low activator with the last signal on the PPS buy or sell signal as a buy, but it's fairly stale at this point. It's really anything beyond 3 or 4 candles I generally discount as being stale, and I give it less importance in my personal analysis. So I'm seeing that we're starting to see some breaking from the strong bullish that we were in going into the last 2 weeks, and I see probably some compression or sideways action. Keep in mind we're near all-time highs, and that's to be expected, that as we reach those levels on the SPY, that there's going to be a little bit of selling until we get some confidence that we can go through that level and go higher. So I don't think that this is a pullback necessarily, but I do think that we're into some compression until the rest of the earnings come out. So my outlook on the week is +1, which means I'm slightly bullish, because the majority of these backgrounds are still bullish, especially this DMI oscillator, which is one of my very first things I look at. The number 2 one I look at is the whole moving average personally, and then I look over here at the market forecast. The market forecast, you can see, can change conditions frequently, so it can give some false positives and false negatives, and you just have to be careful of that. There is something that I do look for with the market forecast, and when it's coming down and it's in the lower range of the chart, as soon as it bounces off of that, that's a very, very strong indication that we're going higher. That usually picks the bottom. So that's something that I use on a daily chart, and I'll be looking at that ahead of probably everything else. If and when will happen, we go to the lower end of that range of overbought, oversold on the market forecast. But in its current condition, it's in the upper range. It doesn't mean that we're overbought and that I should be looking to sell. It just means because we can stay up here indefinitely. We can stay up here a long, long time. But it's telling me that we're in a potential reversal zone, but I'm not expecting a reversal to the downside. I am expecting some consolidation. So I'm a +1 this week on the SPY. You can put in your favorite stock if you want and follow the same thing. So let's take a look at Apple just as an example. It was on our top 20s list. We're bullish on the whole. We're bullish on the DMI. So that's very strong bullish for me. Our RSI Laguerre is showing some weakness, but we're in just some compression. We have no signal here on the market forecast. It's just going sideways, and a bullish signal on the high-low activator with a fairly fresh buy signal on both the PPS and the Radium Fire. So I would be a +1 for sure, and potentially a +2 if I could either lose this RSI Laguerre red cloud or gain a green cloud here on the market forecast at some point during the week. That would give me a reason to go ahead and take a position. One of the other things that I will do is take a look at this go long. That is something that I use to take positions towards the end of the day. So right here, I would have gotten out of all my positions and I would have taken a nice profit. Then I would have gotten in with 50 shares, another 50 shares, another 50 shares, and then it hit my profit target before it got the fourth lot, because I usually do 4 lots of 50 shares. Is the maximum I will go. And this would have gotten me out at a nice profit. And now it's saying go long, go long, go long. So I should have 150 shares of Apple at this point, and I would be holding it because I'm a +1 until I get my signal to get out. And my signal to get out is pretty simple. I look for about a 3% move from the point that I got in. So I would have gotten in at the close of this candle. That's why it shows to buy it here, because I buy in the last 15 minutes of the day. And so I would have gotten this price right here, and it plots it on the next candle. It's just the way the Thinkorswim does their strategies. So I would have gotten in here, and the move to get out is about 3%. So that's all that is. There's no magic to where we get out. It's not like there's a technical indicator that says, oh, we're turning over. I don't use that as my exit. I use a percent gain. And so I would have made profit on this one. And this gives you an idea of what the P&L might have been if I'd have taken all these positions. You can see the P&Ls up here in this little black box up here. And so taking all these positions over the last 3 months, according to this strategy, getting up to a maximum of 200 shares, buying 50 shares at a time, 4 different times, I'd be up approximately $13,700. Doesn't mean that I make money on these every time. I don't. But because my exit is pretty similar. If I go down, I think 5% is my exit. If we go down 5%, I go ahead and just get out of whatever the shares are, and I take my loss. But that's how I do it, and that's what this is. So this is another indication that I should be holding my position and perhaps adding to it if I don't have my 200 shares yet. So I would now have 150 shares as of the close of trading, the last trading day, which was Friday. So looking at Apple, that's how I read this particular 4 grid. Okay, I'm not going to go through individual positions because I don't want to give the illusion that I'm giving suggestions or recommendations. I'm just showing you how I do my thing and how I decide to take a position. So based on the same information that I just showed you on the SPY, I take a look at these stocks on a corporate level. And so I've got the top 8, AMD, Limited Brands, UPS, FedEx, and Hospital Corporation of America, and Qualcomm, Best Buy, and MGM. Those were the top 8. And then I just visually take a look at these on a daily chart based on one of the criterias that I look at. I also have a program or a ThinkScript that tells me, a study, if you will, what my expected move is. This is not the same as what is in my spreadsheet. This is based on a different formula, but it's going to be pretty similar. So what I look at is AMD. It's got a red cloud behind it. It's been pulling back. It's probably not something I would look to buy unless it came down to some kind of support. Now, I might put it on my watch list and say, hey, we bounced off of support here. That happens to be where our support is expected to be, or in other words, the expected move down is expected to be right around here. I might take a position if we hit that, hold it, and then bounce off of that. I might take a position in AMD. But other than that, I'm not interested in AMD this week with all this negative move. Also, I mentioned earlier that you might want to look for earnings. We can see Limited Brands has earnings coming up. So maybe I don't want to take a position in Limited Brands until the earnings has passed. And you may be very good at picking earnings and taking positions. But I have the whole telling me that things are a little bit bearish. And I do have earnings coming up. So if I can find something better, I might look for something better. Although Limited Brands, if it weren't for the fact that the earnings were here, I might put that higher up on my watch list than I would say AMD. UPS continues to show good high basing. This is a high base. In other words, basing to the sideways and going higher. That's why we call it a high base. Same thing here. You might call it a flag. It's the same thing. It may be different terminology, but basically the same criteria makes up a high base that makes up a bull flag. So here we got everything is looking good. I would put definitely UPS on my list. Looks like FedEx got a little jump on UPS on Friday and may have already made a pretty good move up. We'll just see if FedEx gives me another opportunity, but one of these two would definitely be on my list. And be aware that there is going to be a dividend, and that will reduce the price of the stock based on the amount of the dividend. It's a wash, so just be aware that that's coming, and you may be holding the position at that point. Hospital Corporation of America is doing very, very well. We talked about that last week, and it looks like it's getting ready to break out from this high base or bull flag. And if it breaks out above last week's high, expected high, which it looks like it tagged it on Friday, I would be looking to take a position in that. Qualcomm, looking good here. Looks like they did earnings a couple weeks back. So everything's looking bullish here. I would put this into the foregrid that you just saw with the SPY, and I might take a position in Qualcomm. Best Buy has been doing great. I would have rather had it back here, but boy, it's just taken off, and the retail numbers weren't bad that came out on Friday, so that's an opportunity. And here is MGM. It took off on Monday, kind of consolidating here. There is an opportunity there. Be careful with these stocks that are capable of moving very big moves. They can move in either direction, so make sure you're only using risk capital. So basically what I do is just I go through these and I put one at a time. I think the next one was PHM from our list, so I just put that in here and just take a quick look and make a determination whether I want to put that on my watch list. PHM looks like it's holding its high base bull flag and is poised perhaps to go higher. I just see the whole moving average with the bullish cloud behind it, and earnings are behind us. So this might be a really good opportunity in PHM to put something out there for about a month and see it hit its target. So that's just how I do mine, and the same thing with my bears. I have some bears. I see Western Digital, and I think there was FE was on there. So let's take a look at those. FE and Western Digital. FE looks like a low base. Now, it's the opposite of a high base. You might call this a bear flag, where it's just basing sideways in a very tight range, but it's lower than the previous high, the previous swing high. So, I would need everything to be bearish. In other words, I wouldn't do a bearish position with a bullish cloud behind me. Although we are in transition, that's why there is no color here. It's no background. So it's just like here, it's just a background is in transition. So we could be transitioning to something lower, and that might be an opportunity for something to come down to this previous low support down here. So that's a possibility. But Western Digital just seems to be continuing to drop. Everything is bearish on it. This would be more interesting to me than FE might. And then Intel Corporation, we'll take just a real quick look at that and see how it's done. Again, a bear flag, low base. As long as this hole is bullish, I'm probably not going to take a position. I've got a bullish cloud, and that's what that cloud is. It's just when this is rising, the cloud's going to be bullish. When this is falling, the cloud's going to be bearish. That's all that is. So until that cloud changes colors, I'm probably not going to take a position. Last one I'll look at is Gilead, and then we'll turn you loose for the week. Gilead, again, looking really good for a bearish position. Earnings are behind us. They estimated they come in at $1.50 a share. They actually came in at $1.11. So they missed earnings, and you need to do your analysis and see why they missed the earnings. Is that just a one-time thing, or is that systematic, or something that might be more of a problem for them through the end of the year? So, but it's looking awful bearish as far as momentum is concerned. And my guess is that our target on this was going to be right around $66.50 per share. down from where it is right now, which is right up here, about 68.5. So about a $2 move. Let's see real quick. I think I've got that over here. Gilead looks like in the healthcare that we were looking for to get down to 67.11, and we're at 66.60. So, you know what, 50 cents difference between what this study paints as the expected move and what our spreadsheet said. So, relatively in the same vicinity, same ballpark. So, this is another opportunity for a bearish stock if your outlook is a little bit more bearish than mine. So that's how I do it. Hopefully this has been helpful for you. You got some stocks to look at. You have some reasons to look at them. You've got some ways to look at them. And you have some special opportunities with the gambling stocks here in Las Vegas to take a look at and perhaps see an opportunity or two. So good luck this week. I hope you do well and you come back and tell your friends. And remember, hit the subscribe button and leave us a note. Let us know how we're doing and what we can do better. And if you have things that you want to see, let me know. I'll post up a YouTube on it. I know quite a bit about how Thinkorswim works. So I had somebody send me a message this week asking how do you set up alerts if you want to know if a couple of studies are confirming, similar to what you're looking at here, where, you know, if I've got 3 or 4 studies that are all pointing in the same direction, how do I get alerted by Thinkorswim? Well, I know how to do that. So if you want to see things like that, I'm pretty well versed on the Thinkorswim platform. I know the IB platform. I'm not real good with some of those other ones, but if you need something, just leave it in the comments below. I'll be happy to put together a YouTube for the group, and we'll see if we can't help you. So with all that, you have a good week, a profitable week, and remember, good trade.